The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 29th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter that is the intelligence for creating your financial freedom. My outcome, folks, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, what I like to call the 9 rules of the universe. Because the universe is always saying to us the following 9 things. Number 1, if you don't move, I won't move. Or said another way, if you sow, you can reap. But first you must sow. Number 2, it's always saying unless you change what you are, you will always have what you've got. Something to think about. It's always saying, number 3, the way you do anything is the way you do everything. How true is that? Number 4, leaders are readers. What was the last book you read, folks? Leaders are readers. Number 5, don't say if I could, I would. Absolutely don't say that. Say if I can, I will. In fact, don't say if I can, I will. Say if I can, I must. Number 6 out there, wherever you are, be there. On your way to work this morning, concentrate on work. And on your way home, concentrate on home, folks. Always be present. It's always saying, the universe is always saying to us, number 7, don't set your goals too low, because if you don't need much, you just simply won't become much. Number 8, happiness is not something you postpone for the future. It's something you design for the present. That is a biggie out there. And finally, number 9, time. That is our most valuable asset. Yet, many of us tend to waste it, to kill it, and spend it rather than investment. Not you. Thank you for investing your time with us here at TFNN. We really do appreciate that. Respect the rules of the universe because they will respect you, folks. Let's go check out the market. Let's see if it's got any respect out here. We've got the Dow trading up 86 points right now. Trading out at 16,535. S&P up 8. It's trading out at 1877. Composite up 12 points. It's the laggard out here in the marketplace. It's trading out at 4,086. Lead dog, though, that happens to be the Russell 2000. Up 8 points right now, up 0.7%. Apple's trading back a couple of dollars. Microsoft down 16 ticks. Google's up $8 right now. Leading the charge to the upside. Ooh. One of my favorite Mercedes-Benzes. The AMG, but that's the affiliated management group. Nonetheless, it's up 8%, up $14 and a change out here. Looks like, what did they generate here revenue-wise? I don't see it. Well, let's see. Revenues for the first quarter, $502 million versus $593. Well, they missed the top line. That must be forecasting some big numbers. Their net income was $137 million versus $124. They were able to squeeze some profits out of their stone by generating less revenues out there. We've got Alliant Tech Systems. ATK is the ticker symbol, up about 8%, up $11 right now. Buffalo Wild Wings, it's got some nice barbecue sauce on their wings right now, and it is trading up about almost $9, up 6 6/10% out here. Westlake Chemical, WLK, that is trading up about 11% this morning. Orbital Sciences, I think that's on some merger news. That's up about 21% out here. Ameriprise Financial up 5. To the downside, Shire PLC leading the charge. SHPG is the ticker symbol, down about 5%. Waters Corp down about $8 as well, off 7%. Chart Industries down 10%, $7.50. Rockwell International, or Rockwell Automation Group, ROK, is a ticker symbol. That's off 5%. Jacobs Engineering, JEC, down 10%. Stratasys off 5%. Prothena Corp, PRTA, off 14%. Illumina down about 4%. 3D Systems off 10%. Our call number is 877-927-6648. Give me a call, folks. Would be happy to hear from you. As we were going into the last hour, just before the show ended, we were trying to take a look at Buffalo Wild Wings. I didn't provide for enough time out there. So we're going to start off by taking a look at Buffalo Wild Wings, ticker symbol BWLD, formed a nice little Gartley buy pattern, 0.786 Gartley buy pattern, as it did yesterday. Now, was doing it with accelerating volume. That is not exactly how you like to see 0.786 Gartley pattern form. Nonetheless, it did. You've got a nice big bullish reversal signal today. You talk about a bear separating line or bull separating line. That's a doozy out here. Now, it's traveling into, it's got a little bit of a supply line that it needs to take care of. Real big institutional selling inside of Buffalo Wild Wings. The first real sign of significant institutional selling, that took place back on February 5th. Some large positions were unloaded during that trading session. No idea what happened there, but 3.3 million shares to the downside. Bullish would be getting above that 143.84 level post-haste. If we take a look at, though, that supply line, the folks that bought in on that day, they saw it move up, they saw it move down, and maybe they just want to be able to get their money back out here. Let me try to put a black line across there. Because if you take a look, what's interesting, if you take a look at that high, 143.84, it's where you had the big downdraft going. If you take a look at the intraday high that we've seen here thus far, 143.90. So price got up there. It has sold off. Now, if we take a look at any type of a Gartley pattern, has what, 5 potential outcomes. If we take a look at what those outcomes might be from the high to the low out here, the first outcome is a dead cat bounce, a 0.382 retracement. That is where Buffalo Wild Wings is trading at right now, 141.81-ish type of level. So it's made that first area. If Buffalo Wild Wings can clear that supply line that we talked about, then what it ought to do is move up to the second level, and that would be 148.69 out there. If it can get some accelerating volume, then what it ought to do is make a run for that little shooting star. Of course, that was on the trading session of March 21st. That sits high. That is your resistance level. Its ultimate resistance level of 159.81. That is on BWLD, Buffalo Wild Wings. Let's go take a look at some of these stocks that are popping and dropping for us. Normally we do this towards the end of the show or third segment, but we're going to do it right up front. We're going to change it up. We're going to change our pace. We've got AMG, that is affiliated management group out here, up 7% this morning. Let's go see what that is trading into and what this stock chart looks like. So we've got the resistance wall out here. Now, this is a $200 stock. These are the types of stocks that you like to short out here. So let's go take a look at the resistance walls out here. Let's go set the resistance 1, resistance 2. It's been resistance 1 that has held out here. Now, we saw some small sign of selling. Gap down. This thing gapped down. Again, AMG is the ticker symbol. January 24th, gaps down with 358,000 shares. Now, not too bad when you take a look at the volume. Not exactly like volume off of the highs or anything like that. Had some strength going back on the left-hand side of the left-hand side of the chart. That was more so than the move down. But nonetheless, there are sellers inside this equity, AMG, that are camped out right there. Because what happened was, if we take a look at that high, 205.47, this thing had a nice sign of strength in it back on March 31st. So it makes a lower low, has a nice sign of strength on March 31st. It moves up with 1.1 million shares. Remember, it only gapped down there with about 358,000 shares. And take a look at that very next trading session. It gets up there on April the 1st, makes an intraday high of 205.99, closes out at 205.25, keeping that resistance line in place. And clearly there is a supply up there of someone that is trying to unload AMG out there. In fact, the following trading session, it attempted one more time to get above that resistance area. That level has now been tested twice. We'll see if the third time is a charm, if in fact AMG can get up there. So I would be watching this equity at about the 206-ish range out there. If the sellers are able to push this thing back, can trade all the way back down to its swing point, which would be from yesterday out here. That is on AMG out here. Boy, if this thing ever did fall apart, it would be Sayonara City out here, because its last real sign of strength or volume is back in May of 2012. Now, it's had one heck of a nice run, but that is about a 50% haircut, because that price level around 102 to 105. I am not saying that's where it's going. I am just noticing where the volume on that chart is, and you should too as well. You should always notice where the volume bars are when we take a look at any chart. In fact, that's the first thing we should do. In fact, let's do that on this next chart out here. ATK is the ticker symbol, up a nice $11 this morning, up 8%. Let's go see what ATK is doing. As I say, very first thing you want to look at on any stock chart that you pull up is where is the volume. In fact, it's always nice to just simply go ahead and mark those points if prices above it. Just simply go ahead and draw some lines across the highs out there. There's one nice volume spike. Here's another nice volume spike out here. Here's one to the downside. So on the downside, I'm going to go ahead and just use a red line out here just real quickly. So we'll do that. So there's our volume bars, just so you know where you're trading. What is this doing here today? Well, it's gapped up. Volume behind the move out here. Now, today's candle looks very much like a shooting star. It's not exactly what you want to see. Of course, if you fill in the wide-ranging bar out here, you can see that because of the gap, it's really kind of a suspect shooting star. You really do need to fill in those gaps in order to really get an idea of what the candle formation looks like. What we know that it's doing here right now, it's taking out a B point, and it's doing it with volume. That B point is going to be your swing from April the 4th. And the high is 147.84. 147.84. If it can close above that today, well, it'll have the volume. That only had 539,000 shares. So far today, it's done 336,000 in, 47 minutes of trading out there. So it's going to have the volume if it can stay above that level. The small A to B equals CD, and I do mean small. That would take us up to the price level of where? Let's go see 1 to 1. Well, it's already hit that. So I would have to say the next level, 158.97, maybe 165.95 out here. That's the small A to B equals CD. There's a larger one that it's also confirming here this morning, because that's 940,000 shares. That's the B point from February the 3rd out there. Again, so far today, it has done 336,000 shares. So it seems like this thing wants higher price out here. We do want to pay attention to this, though. Why? You really want to pay attention to tomorrow's action. Because let's just say in this wacky market that we have out here, you got a market, maybe it sells off. Maybe the fireworks, maybe we've just seen the fireworks in the marketplace out here. That would not be unusual to what it is that we've seen here over the past several days out here. Or let's just say you wake up tomorrow and for whatever reason, to celebrate the end of the month, April 30th, window dressing time period, the market decides to go ahead and sell off. Well, in this case, ATK at what looks like its all-time highs. Let me put this on a monthly chart just to confirm that. I didn't mean to do that. What I meant to do was hit the time button. Let's go see if this is So at its all-time highs on a daily chart out here, what it could form would be an island reversal. And $149 stock, I don't care if it's got an A to B equals CD. If, in fact, that's the pattern that it formed out there, you don't get any more bearish than that, and that gives you a nice reward to a risk trade. I'm not saying that's going to happen. But what I am saying is I'm going to keep this chart up here, and we're going to take a look at that tomorrow to see how Alliant Tech Systems actually holds up. Right now, Dow's up 70, S&P is up 6. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up about 64 points. S&P is up 5 out there. So let's check in on let's start checking on some of the indexes, get a feel for what's going on inside the market out here. Let's take a look at the New York Stock Exchange. Certainly one thing that we want to be taking a look at. Now, I don't have the chart here updated at the bottom of the screen. In fact, it's not updated, so why do I even show that? That's an excellent question. So that being the question, I'm going to go ahead and get rid of it. 1, 2, 3, 4. We got rid of that. Oops. There, deleted, it's gone. Now I don't have to worry about explaining that to you. What I can tell you, though, is I can tell you that the summation index is still turning down inside the New York Stock Exchange. Summation index is a great tool for understanding the trend of the marketplace. Now, how does that summation index turn up today? Very simply, it just needs net advancing issues of greater than 468. As we speak right now, we're at 921. We're early into the session. You've got advancers outpacing decliners at about a level of about 2-to-1 as we speak right now. You get above 468 today. And with conviction, you know me, 469 doesn't do it, nor does 470, but with conviction, hey, 900 would do it. Then you get a summation index that is pointing up, and that's saying that the wider swath, the wider breadth of the marketplace would, in fact, be telling you that it wants to move higher. Now, what's interesting here is that the NYSE, and you got to take a look at it on different time frames. So we'll go ahead and do that for you, especially as we come closer to the end of the month. But right now, what it's doing, it's trading inside. Now, let's step back just one moment. So we've seen some pressure inside of the markets. But the thing is, pressure inside of the markets And if you didn't catch the first hour of the show, what I was talking about was the tortoise and the hare. And, of course, the hare, being the faster animal, that happens to be, in this case here, about the Russell 2000 and the NASDAQ. I consider that to be faster-moving, type of positions out here. And it's really about the it's really about, and I forgot, didn't bring into the fray the NYSE, because that's just kind of like the referee in the market, isn't it? But if you take a look at the fast movers out there, Sting, what is it, float like a butterfly, sting like a bee. You'd have to say that probably qualifies as the Russell 2000 and the NASDAQ out here versus the S&P and the Dow, more like the tortoise out here, a little bit slower moving, if you will. In this case here, the referee of the system is going to have to be the New York Stock Exchange. So the key to be paying attention to, one, net advancing issues. If it can be greater than 468 today, it says the bulls are back in town. If it doesn't, it says that the bears still have control of the ball. Now, in the case of New York Stock Exchange, the bears have had control of the ball for the last couple of trading sessions, yet they really haven't been able to do anything with it. I mean, we're talking about retracements, just simple retracements, just dead cat bounce retracements from the low, April the 11th, 10,271.36 to the high. That came in here back on, 4 or 5 trading sessions ago, April 22nd, at a 10,621.23. Hasn't even done a .382 retracement, which is really interesting. It is really the interesting dynamic of the market that is out here. Really interesting. If, in fact, the NYSE at the end of the day can close inside 10,566, 64, pretty good chance that we'll have seen net advancing issues of greater than 468. It'll be trading inside that swing point. And the reality is, if it can close then, the New York Stock Exchange, the real bullish move would be closing above the high of April the 4th out there, 10,669.43. In my opinion, that cannot be ruled out because I'm going to say that the New York Stock Exchange is really one of the better indexes that is the referee as to what's really going on inside of the marketplace here. And at this stage, it's still showing, even though the summation index is ticking down in it, I get that. It's just not showing that with regard to price being the actual arbiter out here right now. So that's what's going on inside the New York Stock Exchange on the daily chart out here. Obviously, we take a look at a weekly chart that's going to now encompass, obviously, a part of May, a part of sell in May. But let's just go take a look at weekly charts out here for the NYSE. Give me a moment. Let's pull that up on the screen here. Let me just switch over to a couple of different charts. Let's go here. Let's take a look at the NYSE. There's the monthly chart here inside the New York Stock Exchange. I guess I'll start here. New monthly chart for the New York Stock Exchange is anything but bearish. Now, that can change. Let me actually see if it can change. The low of last month, March 31st, 10,272.09. Yeah, it can. Because this month's low is 10,271.36. So the New York Stock Exchange has the potential for a key reversal session out here. What it would take in order to do that is we would need to see a close below 10,538.44. Right now, it is not a key reversal session. And therefore, it's what it's done. It really rejected the 2007 highs, and that's so amazing because unless you're a person who believes that consolidation patterns only work on certain things and not on others, well, this is a huge consolidation inside the New York Stock Exchange, like 6,000 points. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 52. S&P is up 3 right now. So before we went to break, we were taking a look at the New York Stock Exchange. I had the monthly chart up on my screen out here, and it's really incumbent upon yourself if you want to be a successful trader inside these markets. I don't care what it is that you trade, that you can't show up at the trading desk. You can't show up and take a look at the charts with the exact same opinion that you left. You really need to be this is my opinion. You need to be able to take a look at both sides of the trades. In fact, there's nothing better than going ahead, putting your trade on, taking a look at the the chart, and give you all the justification for what it is that you're doing, and then get up, go take a walk, go stretch your legs, go take a nice long walk, come back. And then come back and take a look at the chart and try to figure out the other side of the trade. Because for every buyer, there has to be a seller. For everybody that is selling, there's got to be a buyer. You're selling because you think it's at a high. You wouldn't sell otherwise, right? Other than maybe to cover a cash flow bill of some sort out there. And that buyer is saying, hey, I think that price is going to go higher out there. So don't you want to understand what that other person is thinking? What do you think? They're nuts? Maybe they are. But maybe you ought to take a look at the other side of the trade. What would be the other side of the trade? We're at April 29th right now. Tomorrow's the end of the month. You know what typically, the expression of sell in May. I don't watch too much of the financial news media. Usually I leave the screen on, and I see things flowing back and forth out there. But I leave the sound off purposely because what I want to trade is the stock patterns out here. When the market is closed, the cash market is closed, and maybe I'll turn it on just to hear what other people are. Just more as entertainment out there, because the regular news is so doomy and gloomy that, In any event, let me try to keep this on track here. What would be, and oftentimes the market does the opposite thing of what you would expect, right? So if everybody's is expecting the sell in May, it hasn't begun necessarily just yet, or you could take a look at the NQ and say, yeah, it began on, we'll go take a look at the date out there, March 26, something like that, because we've seen the beginning of a downtrend price channel that's out there. But the reality is, it would be just like the market to do the exact opposite of what it is that you think. That's why we go back and we take a look at the charts, and we just say, what is it that the charts are telling us? And that's why I really tried to differentiate for you today the difference between the tortoise and the hare. And really, in that case there, in that story where we're taking a look at the speed, and I consider speed to be, the NASDAQ-y type stocks out there, small caps, nice and agile out there, versus the S&P 500 and the Dow. And that's really the two battles that are going on. And we're just going to say the referee is going to be the New York Stock Exchange. The New York Stock Exchange on the weekly chart now, there's really nothing bearish about it, other than a hurdle of a reversal signal, which was the shooting star candle. That's from the week here of April the 4th, was followed up with a nice big bearish engulfing candle the very next week. But what happened the week after that? It was negated. It's as if the forecaster of the weather went outside, looked out the window, and said, yeah, looks like cloudy skies, looks like we're going to get some rain. And then, of course, what came in right behind it was a nice front that had things dried out. So that bearish engulfing candle completely erased out here. And if I take a look at the combined sessions, all three of these sessions, it's not as bearish as it actually looks out there. That's why you've got to be able to take a look at candles, meld them together to get an information of what the bulls and the bears are actually telling us here. Last week we saw the New York Stock Exchange close inside its shooting star candle. The low, which was 10,483.70, it was tested at 10,484, never got down, was able to test the low, closed back inside it. Actually says the shooting star likely wants to be tested out at 10,669. That's truly the referee in the marketplace, the wider swath. So key number today, 468 or more. Net advancing issues. The bulls will have taken control of the ball going into window dressing at a minimum, going into the end of the month out here. And I don't know that your expectation ought to be that selling will occur on May 1st out there. Or maybe it starts tomorrow at 2:15 when Janet Yellen gives her testimony and speech out there. I say just trade the patterns that you see inside the marketplace and be willing to go back and take a look at the other side of the transaction. What's the other party thinking when you're selling? What is it that they're buying and why? And vice versa out here. So that's taking a look at the New York Stock Exchange. Sorry for breaking it apart, but we really needed to out here because of the unique messages that we're seeing in the market. Now, I throw this out to you as well. And I throw this out to you as well because we know that from a liquidity standpoint, we've got a couple liquidity gauges. One of those being the currency pair of the euro, Japanese yen, the actual carry trade that's going on inside of the market out here. And as we take a look at that, what is interesting, well, first I take a look at the daily chart out here because the daily chart's going to show that you've got a rising wedge. It's got a wedgie, which is a bearish pattern out here. And price got up into the trend line this morning. Price moved up into, it's got really two trend lines to take a look at. I'm looking at the shorter trend line, that blue diagonal line going across my screen. And what's interesting is price got up there. That gave us the indication of what was going on from a futures standpoint. And price has pulled back. The Euro-Jap, now, until the Euro-Japanese yen, quite frankly, breaks the rising trend line out here, and more importantly, breaks the actual consolidation pattern that it's trading within out here. I don't know if we'll really see the consolidation lows. What's interesting here is that the currency pair has pulled back and the market has not. Something to think about. Or as, and I got this wrong yesterday because I said it was Schultzy. It is not Schultzy. It was Colonel Klink. It was Colonel Klink that said very interesting, right? So in any event, I consider this to be very interesting out here as we take a look at the Euro-Japanese yen, with the body being the essence of price. And that's truly how you ought to take a look at a candle out here. The body is the essence of price out here. Really what we've seen over the past 8, 9, 10 trading sessions is really, for the most part, a move sideways. And really, that's what we have going on inside the currency pair. So that means let's go look at our other liquidity gauge, and that is the VIX index out here. If we take a look at the VIX, yesterday had all the opportunity to get above, and it did get above. And it was trading above the 50-day exponential moving average, which was 1448, but it gave it up. And it gave it up, and today you were still trading below the 50-day exponential moving average, which is 1447. It's trading out at 1409. It does say there's liquidity in the market in order to be able to push up price. And that's the difference between... That's why volume is one element, right? Liquidity is another element to be able to take a look at. One might ask, how can markets go up on lighter volume when there's money out there that has to be put to work? And I think that these are two excellent gauges to help you to determine that, because of just price behavior. That's how things can move on light volume out there, because price is chasing equity, is chasing positions out there. So that's what I would be focused on. That's what I am focused on. If we go take a look at some of the sectors within inside the S&P 500, let's go see what we've got out here inside the S&P 500. Let's go take a look at the sector that has been on fire, still on fire out here, and that's the energy sector. Right now, today, now it's only the fifth weighting, well, fourth or fifth. I haven't looked at it here recently, but it's the fourth or fifth weighting structure at this stage. Probably has moved up to number 4 out here. So I will have to take a look at the SPDR website to find out. Maybe I'll do that during a breakout here, or maybe you'll do that right now, and then you'll report back to me through the Tiger's Den or something. In any event, out here, the April 24th swing point high, that price level's at 94.25, 8.8 million shares. We're trading above it today. We're trading above it with what? Volume of 2.9 million shares, 3 million shares, so not too bad here for the first hour and 12 minutes of trading. So some nice volume behind its move. Do we have a confirmed A to B equals CD to the upside? A small one. Let's see. We had volume of 14 million. That was taken out with 13 million and 18 million. Yeah, I'd say we do. Let's go see what the small A to B equals C to the upside looks like here inside the energy sector. So we've attained the 1-to-1. It's on its way up to the 1-to-1.272. It's on its way up to the 95.07. Let's go take a look at the weekly chart. Let me switch over. We'll take a look at the weekly. I'm going to switch over to a different tab out here. Let's see what the weekly chart for the XLE looks like. Oh, that's interesting. The XLE above the top of its rising price channel, which may need to be reset. That's the price channel coming off of the 2009 lows. How about that? So coming off the 2009 lows, the energy sector is above that area. Now, there's nothing wrong with that. That doesn't mean it has to act as a resistance. In fact, far be it for it to have to act as a resistance out here inside the energy sector. Let's take a look at, what do we take a look at? Let's take a look at large A to B equals CD patterns. I think that's probably the best thing. Let's start from the lows back here in 2009, in March of 2009, to a high that was put in back in April of 2011. Let's come down to the low that was put in here in October of 2011. And so it's on its way to completing the larger 1-to-1 A to B equals CD, the upside. It says 97.80 is very likely where the energy sector wants to head to. Of course, if we take a look at weekly charts here for the energy sector, for the XLE, strong like bull. There is not anything bearish about the XLE that you can find. And it's got freedom to run. It has absolute freedom to run to at least the 95.70 mark out here. Let's go take a look at the technology sector, the number 1 weighting structure inside the S&P 500. Let's go see what that is communicating to us, if anything. I believe this has just been in a nice little consolidation out here, but let's take a look at it. Let me get rid of that consolidating pattern out here. Let me get rid of this retracement. So right now you've got the, what was this trading back into? What was this doing? A to B equals CD to the downside? Is that what it formed out here? The energy sector? Yeah, it did. Just about a 1-to-1 A to B equals CD as it made its lows back here on April the 15th. Now if we take a look at volume yesterday, so it's pushing higher. Yes, let me just refresh this. Let me make sure I've got all the correct volume out here. So let's look at yesterday's move, because yesterday it was moving into a swing point with volume. And the downdraft out here, really not too bad. Let me see here. How about that? Let's see, I'm trying to look at even the volume of the swing point here from the downdraft of April the 4th, 10 million shares, and it's trading inside there. And yesterday was pushing up with 12 million shares and certainly pushing into the swing point here from April 24th. It only has 5 million shares. So it looks like the XLK wants to at least go test the high of 36.53 out here. And it's really not a bad looking pattern out here. So looks to me like the the technology sector wants to go make a run for its swing point here of April the 2nd. That would be the low of about 36.66. That's what, good volume yesterday as it was pushing higher out there. It tested the lows. It certainly rejected the lows, but it was pushing into the trading session from April the 24th out there. So let's go take a look at the weekly chart. Let's go see what the weekly chart for the number one sector inside the S&P 500. Let's go see what that looks like out here. XLK. Let's go see if we find anything that looks bearish about this pattern here. And the answer is no. So it's already trading inside of the April 4th swing point. Now, that's got 42 million shares. We did 13 million shares in the first day or so of trading, but that actually is not too shabby out here. So the number one weighting structure inside here's where you see that dynamic, right? You've got the Qs, you've got the NDX, you've got the Russell 2000, showing weakness, and the S&P 500. You start going, and as I said, the S&P 500 and the Dow, they're just saying no way. And that's where you've got the fight. 530 stocks trying to take on thousands of stocks out here, and even the sectors within inside the S&P 500. Very difficult to get bearish on the first two that we took a look at. Let's stay in the weekly chart here. Let's stay in the weekly charts. Let's go look at the health sector out here, the XLV. I will take a look at the XLF, too. I think XLV might be the third weighting structure inside here. So the XLV, let's see, this thing here, let's see. So the swing point that it's gunning for is the low from March the 7th, 58.61, 56 million shares there. Last week it was pushing with 37 million shares. Let me refresh my screen, just make sure what we got out here. So it was pushing higher with a little bit lighter volume. So the energy sector is really struggling out here. If it were able to get some legs, let's go look at the daily chart now. So on the weekly basis here, this is one of the weak links with inside the S&P 500. Let's take a look at the daily chart out here and see what kind of strength, if anything, we can find out here. So the XLV price right now at 57.93. Looks like that pattern never came to fruition. It formed came back and tested its swing point low, which was on February 5th. That had 16 million shares, and that was tested with 11 million shares. So you saw a rejection of a swing point low. Let me go ahead and put the line across the screen out here for you. So it tested its lows. It couldn't bust out the lows. That was a swing point from the trading session of February the 5th. You can see the actual test of that area took place on April 14th, lighter volume, right? Which is the reason we're taking a look at that. This is because it's one of the weaker sectors as we took a look at the weekly chart out here. And then what it did is it took off topside with volume on April the 15th out here. It moved higher on April the 16th as well. Had some nice big volume inside that trading session. So the daily charts are showing that this thing has got a little bit of giddy up and go. Yesterday, yesterday was a move down to test in essence, to reject this high volume, move higher. So it tested the April 16th bar, which had 29 million shares. Yesterday was a test of that area at only 9.7 million shares. So what the healthcare sector is doing right now, traveling inside April 22nd, 8.9 million shares. It was pushing it yesterday with 9.7 million shares. If it can take out that high, looks like it will try to make an A to B equals CD. Let's take a look at the trend line, or channel line. I think we've got to look at the trend line out here. So it looks like that's really what the XLV is trying to do, is trying to trade up into that trend area. It looks like it wants to move up and get into about the 58, 59-ish type area. Anyway, Dow's up 76, S&P up 7. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 76 points. S&P is up 7 out there. And you know as much as I do that the whole key to financial freedom is to get your money to work harder for you than you do for it. There is nothing that I take more seriously than putting my clients' money at risk out there. Go to the homepage at TFNN.com. On the homepage, towards the middle section, you'll see my name, Steve Rhodes. Click on that. Give Mastering Probability a shout out there. A little as $3 a day. If you got Tiger dollars, about $4.80 or so, I think, per day. If you don't have Tiger dollars out there, for every $10,000 invested. This goes back to when I created the Rhodes Momentum trading strategy out here. This goes back to August of last year. On average, it's producing about $9.50 a day. So if you got 100,000, that's 95. If you got $1 million, right, that's 9,500 a day, something like that. You do the multiplication out there. Just go to the homepage at TFNN.com. You will love the service out here. Let's look at today. I did get a chance to look at the sectors within inside the S&P 500, and through the close of Friday out here, the energy sector actually has taken the number 6th ranking out here. At one time, it used to be in the top 3. So the XLE is now about 10.6% of the S&P 500. The industrials have moved up into 5th place out there. And I don't know the answer to that about the brick there, Alberto. But you've got technology, number 1, about making up about 21%. Financials, about 16%. Healthcare, 13%. Consumer discretionary, 12%. Industrials, 10.76%. And the energy sector, about 10.6% out there. In any event, let's take a look at, let's just recap the trading session here today. What do we know about the market? We know it's the fight between the bulls and the bears. S&P 500 yesterday rejected the top of the consolidation box out there. He's going to try to take in on the area where the bears are hanging out. That is at the price point of 1882.50. If you see a close above that, I can tell you on the daily chart, not only does it suggest getting up to 1892.50, it actually sets up moving beyond that and trying to take out that level out there, one thing at a time. So the 1879 to 1882 level, that is very important with regard to the ES Mini, the S&P futures. It gets above that, and it really starts to turn bullish in the marketplace, at least inside the S&P 500. Maybe that lifts all of the boats higher out there. With regard to the NASDAQ, regard to the Russell 2000, they're struggling with their descending price channels inside the NASDAQ. Let's look there first, because in order for this market to really get bullish versus just some type of counter-trend rally out here, the NASDAQ composite is going to have to clear its descending price channel. That's somewhere around 35.89 or so. That's another 30 points higher out there. So that's what you want to be watching for. Inside the New York Stock Exchange, what you're looking for is you're looking for net advancing issues today, so long as they exceed 468. Says the bulls are back in town. Of course, we know by taking a look at the New York Stock Exchange, the bears have been able to do virtually nothing. And I do mean nothing with the New York Stock Exchange. The bears have had the ball here for 2 days, and they have really been able to do nada out here, have not even been able to get price down to the 0.382 retracement level. I don't know about you, but that says to me that the wider swath of the market is communicating that it does not want lower price out there. Really interesting. The VIX index, that's traveling right now below the 50-day exponential moving average. Whenever that happens, it says he's got liquidity, and the market's going to do one of two things, either travel sideways or move higher out there. So key number today, 1446 on the VIX index, and that's what I would be looking at. Folks, it is Terrific Tuesday. Thanks so much for joining me. Always a pleasure to be with you. Have a terrific day. Stay tuned. Our man Basil Chapman is up next. He's going to take you for a ride on his surfboard. You're going to go looking for Chapman waves out there. Have a great Tuesday, folks. Look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.